The first two I'm going to go pretty quickly through because these I give you all the time in looking at the live charts. Number one, and just so you know, if you've never taken a course at Online Trading Academy, you're also getting a little preview of what the course is like. These are some slides right out of the course. These things are all pretty big lessons. So number one, how did price leave the level? Now, with odds enhancers, we come up with a nice probability score. Okay? I guess a pilot, based on their entire checklist, which probably includes the flight plan and information from planes in front of them on whether the air is choppy or not. You know, once that whole checklist and plan is done, they could probably pretty accurately, for the most part, predict whether it's going to be a smooth flight or a bumpy flight. I fly a lot, and most of the time they're pretty accurate. You know, sometimes, you know, some bumpy air comes up that wasn't expected, but for the most part, they're pretty accurate. I mean, when they tell the flight attendants to sit down in the middle of a flight, it gets really bumpy. So number one, how did prices leave the level? Okay? Notice on the right, real quickly, you can have a gradual move away from the level, or in the middle, you can have a stronger move away from the level, either with big red candles or big green candles. Or number three, all the way over on the left, you can have a gap away from the level. Out of those three choices, which one represents the strongest supply and demand imbalance? Because that's what we're looking for, an imbalance. We don't want, you know, prices always turn in markets at price levels where supply and demand is most out of balance, right? So the gap represents that. That's why it gets a score of 2 out of 2. And again, the lesson here is, like I just said, the stronger the move away from an area, the more out of balance supply and demand is at the area. Okay? Yeah, all news is going to do is speed up what was going to happen anyway. Odds enhancer number 2. And again, we're going to apply this to the live charts in a few minutes. Odds enhancer number 2. How much time did price spend at the level? So again, for those that are new to this one's important because this one is exactly opposite of what the trading books say. The trading books all say the same thing. They say if you're looking for key support and resistance levels, right? Those key words, support and resistance in trading books. Remember, when I say the word supply and demand, I'm not referring to the word support and resistance. Okay? So when the books tell us, though, to look for key support resistance levels, they say look for areas on the chart where there was lots of trading activity, many candles on the screen, above average volume, and so on, right? But if you think the logic through, I think you're going to find that the opposite is true. For example, at price levels in any market where supply and demand is most out of balance, are you going to spend, you know, are there going to be lots of trades at that level, many transactions? Yeah, Al stock, yeah, very few. Remember, if you have a price level where you have, you know, 1,000 buyers on one side, and 1,000 on the buy side and 900 on the sell side, price is going to spend quite a bit of time there. But as soon as the 900th lot is filled, you've got 100 on the buy side left, no sellers, price is going to go up. It has to. Okay? But think of another scenario where you have 1,000 on the buy side and 50 on the sell side. How long is price going to stay at that price level? Not very long, right? Because once the 50th lot is traded, now you've got 950 on the buy side, 0 on the sell side. Price is going to shoot higher pretty quick. It's a bigger imbalance. So if we all agree with that logic, then what is the picture going to look like on a price chart? Is it many candlesticks and a lot of time, or very few? It's very few, the opposite of what the trading books say. So be careful with that. Right, so you want to keep the time frames pretty much relative. If you see I'm reading the chat there, Edward and Vlad. So if you see a chart where you have, I was just looking at the 30-minute euro. All right. Look at this 30-minute chart of the euro. We've got a supply level right here. I know my charts are off. I have to turn them back on. But I just turned them off right before the session started to make sure the sound was clear. But here's a supply level above current price. Notice very little trading at the level, strong drop away from the area, And notice the candles, like 1, 2, 3, 4, maybe 5 or 6 candles in there at most, right? Very few candles in there. Okay, but if I go to a, if I go to a 60-minute chart, you're going to see half the amount of candles in there. There it is. Okay. But if I go to a, 5-minute chart, you're going to see tons of candles in there. Right? See that? But I would say, when you find the level in, for example, this time frame, here's a 60-minute chart. Okay, I just keep it relative, and that will work out fine. In other words, if prices come up to this level and turn lower, yeah, you're probably going to have little 5-minute demand levels on the way up, but they're not going to, but ultimately, price is going to go down through those 5-minute demand levels before going up through the 60-minute supply level. Does that make sense? If there's a new supply level formed, or a new demand, a 60-minute demand level formed close to this 60-minute supply level on the way up, yeah, then we're not going to take it. Mike, I wouldn't worry about that too much because every time I change this time frame, wicks will become candles, candles will become wicks. You can make yourself crazy with that. But the one thing you don't want to see, like I don't want to see a lot of, like I don't want to, in this level I'm showing you here, I don't want to see a big spike higher with a candle. Okay, I don't want to see that. I want to make sure the price could not go higher. All right.